Good morning. We will pay attention to the different transactions when the different inventory systems are used. Transactions for cash sales. When the perpetual inventory system is used, two double entries are completed. One double entry is completed at the sales price, debit bank, credit sales. Bank is debited to increase the money in the bank. Sales is credited to increase the income of the business. The second double entry is completed for cost price, debit cost of sales to increase the expense, credit inventory to reduce the asset for inventory. When the periodic inventory system is used, one double entry is completed for the sales price, debit bank, credit sales. No entry is completed for the cost price because you don't use the cost of sales account and you don't use the inventory account during the financial year when you use the periodic inventory system. Cash sales are 400 and the cost price 300. In the perpetual inventory system, in the cash receipts journal, the bank account will be debited with 400 Rand. The sales account will be credited with 400 Rand to increase the income. In the periodic system, you will also debit the bank and credit sales, so that entry is exactly the same. But in the perpetual system, you will have a cost of sales column, and because you have a cost of sales column, the cost of sales account is debited to increase the expense because expenses increase on the debit side and decrease on the credit side. Inventory is credited to reduce your asset because assets increase on the debit side and decrease on the credit side. No entry in the periodic inventory system will be completed for cost of sales and inventory. In the cash receipts journal, you have an additional column for cost of sales. In the periodic system, you will not have that column for cost of sales. The effect on the accounting equation: when money is received, bank is debited to increase the assets. Equity is credited to increase equity with the sales amount. Cost of sales is debited to decrease the profit, so equity will decrease. Inventory will decrease because you are selling your inventory. In the periodic system, only one double entry will be completed to increase the bank and increase sales, that will increase equity. Transactions for cash purchases. When the perpetual system is used, you will debit inventory because you increase your assets. When the periodic inventory system is used, you will debit purchases because you are not allowed to write in your inventory account. The difference between inventory and purchases is inventory is an asset, purchases is an expense. The purchases account is debited because no entries are recorded in the inventory account. We purchase goods for 8,000 Rand. In the cash payments journal, in the perpetual system, you will have an inventory column. In the periodic system, you will have a purchases column. In the perpetual, you will increase your assets on the debit side with 8,000. In the periodic system, you will debit your purchases with 8,000 because you increase your expenses. In the accounting equation, your inventory will increase your assets, and your bank that you take the money out will reduce your assets. In the periodic system, you will decrease assets with the money that you paid, and because purchases is an expense, expenses decreases profits, the equity will decrease with 8,000 Rand. When goods are sold on credit or goods are returned by debtors, the two systems will also be different. So for the credit sales, you will debit the debtors control account and you will credit the sales account. And for the second double entry, you will debit cost of sales and credit inventory. When you use the periodic inventory system, you will record the first double entry for the sales price, but there will be no cost of sales and no entry in the inventory account. So you will not have an entry for cost of sales. In the debtors allowances, when the goods are returned, you will debit debtors allowances to decrease the income and the profits, and you will credit the debtors control account to decrease the asset. In the periodic system, you will complete that same entry debiting the debtors allowances, credited debtors control, but in the perpetual system, you will have a second entry for the cost price where the inventory is returned, so inventory increases on the debit side, and you credit cost of sales to decrease the expense. No entry will be recorded in the periodic inventory system for the cost price. In the debtors journal, you will have a column for sales and you will have a column for cost of sales. In the periodic system, you will only have a column for sales because you don't use cost of sales. When you post that entry to the ledger, you will debit the debtors control, credit sales to increase the assets and increase the income. In the periodic system, you will also debit debtors control to increase debtors control, asset and credit sales to increase the income. In the perpetual system, you will complete a second double entry for the cost of sales. So cost of sales is debited because expenses increase on the debit side. Inventory is credited because you are selling inventory and inventory decreases on the credit side. There will be no entry for cost of sales or inventory. In the debtors allowances journal, you will have a debtors allowances column, and for that 800 Rand, you will indicate that the debtors control is reduced on the credit side with 800 and debtors allowances is debited with the 800. So the sales account is reduced with the debtors allowances to decrease the profits. In the periodic system, you will also decrease your debtors on the credit side and you will debit debtors allowances to decrease the profits. In the perpetual system, you will complete a second double entry to indicate that inventory increases on the debit side because the inventory was returned, and you will credit your cost of sales account to decrease the expense for cost of sales. No entry in the periodic inventory system. In the accounting equation for the goods sold on credit, you will complete two double entries in the perpetual system. Debtors control is debited to increase assets. Sales is credited to increase equity. The same entry will be completed in the periodic inventory system. The second double entry will not be completed in the periodic system because you don't record cost of sales and inventory during the year. In the perpetual system, you will indicate that your assets decrease with 5,000 because you sold goods, and you will indicate that equity decreases because cost of sales is an expense that will decrease my profits. When goods are returned by clients, the assets will decrease because the debtors owe less money. Debtors allowances reduces your profits, so equity will decrease. The same transaction in the periodic inventory system. For the goods returned, the assets will increase because inventory increases and equity will increase because you decrease cost of sales, and if expense is decreased, your profits will increase. No entry for the cost of sales or inventory in the periodic inventory system. Goods purchased on credit or returned to suppliers. In the perpetual system, you will debit your inventory account to increase the asset, and you will credit creditors control account to increase your liability. In the periodic system, you are not allowed to write an inventory, so you will debit purchases and credit creditors control. When the goods are returned in the perpetual system, we will decrease the creditors on the debit side, and we will decrease the inventory on the credit side because we returned the goods. In the periodic system, you will also debit your creditors control to reduce your debt, but you will open a new account, creditors allowances. So because you are not allowed to write in your inventory account, you will have a creditors allowances account in the periodic inventory system. In the creditors journal, you will have a column for inventory, and in the periodic system, you will have a column for purchases. In perpetual, you will credit your creditors control to increase your liabilities on the credit side with 7,000. You will debit your inventory to increase the assets on the debit side with 7,000. In the periodic system, you will credit your creditors control with 7,000 to increase the liability, and now you will debit purchases with 7,000. Purchases is expense. Expenses increase on the debit side and decrease on the credit side. When the goods are returned, you will decrease your creditors because you owe them less money on the debit side. You will credit inventory to decrease your inventory on the credit side. In the periodic system, we will also decrease creditors on the debit side, but now we will open an account for creditors allowances, and we will credit creditors allowances with 4,000 rand. So in both methods, we have a creditors allowances journal. So whether you use the perpetual or the periodic system, when goods are returned or you receive a credit note from a creditor, it will be recorded in the creditors allowances journal. But in the perpetual system, you don't use a creditors allowances account, because when I return goods, I record it on the credit side of inventory. In the periodic system, you will have a creditors allowances account, because this creditors allowances will decrease your purchases. So purchases decreases profits, and creditors allowances decreases the purchases and will therefore increase the profits. When goods are purchased, inventory increases assets on the debit side and will increase liability on the credit side. In the periodic system, we don't use inventory. We use the purchases account. Purchases is expense. Expense decrease profits, and your liability will increase with 7,000. When the goods are returned, your assets will decrease because you return the inventory and you reduce your amount of inventory, and you will decrease your liabilities because you owe them less money. In the periodic system, because you are returning goods, creditors allowances will decrease expenses, and when expenses decreases, your profits increase, and in the liabilities, you will decrease your liabilities because you owe less money to the creditor. Drawings and donations. In the perpetual inventory system, goods are purchased with the purpose of selling at a profit, and when you buy goods to sell, you will record it in the inventory account. If the goods are used for any other purpose, then you have to reduce the inventory account because then the goods that you take out will not be sold at a profit. In the periodic inventory system, goods purchased with a purpose for selling at a profit will be recorded in the purchaser's account. If these goods are used for another purpose, you will reduce your purchaser's account to reduce the expenses for purchases. Dankie. The owner took goods with a cost price for his own use, R100. In the perpetual system, we will have to increase the drawings account and we will have to decrease the inventory to indicate that the inventory is not used for selling purposes. In the periodic system, you will have to credit purchases because you want to reduce your expense for purchases because the goods are not sold at a profit. When goods are donated, you will debit donations and you will credit inventory to reduce the inventory in the business. In the periodic system, you will debit donations and you will credit your purchases account. So if for any reason you use any of the inventory for another purpose, you have to reduce the inventory to indicate that that inventory is not there to be sold, and you will have to go and create an expense for stationery or marketing or advertising, or whatever purpose you use the goods for. In the periodic system, you will reduce your purchases account to reduce that expense, and you will debit donations, stationery, drawings, marketing, etc. In the accounting equation, when the inventory is taken, you will reduce your assets. In the periodic system, the purchases is expense. So if we decrease expenses, we increase our profit, so equity will increase. For the drawings or the stationery or advertising, you will debit the account, so it means it's an expense that will decrease equity. And you will do the same in the periodic inventory system.